Hey guys, it's Marty back with Options Unleashed. Tonight's video is going to be on PayPal. We're going to do an options video tonight. There's been a lot of, and I know earnings is on November 1st after the bell, so not next Wednesday, the following Wednesday. We've got a lot of earnings before then, so we're going to get right into it. We'll look at some of the fundamentals, the guidance, earnings and all that, and take a look at expected moves. We'll take a look at a couple option trades. I'll give you kind of my quick preview of what I'm looking at, but then we'll have to come back next week and do another video, probably on the Tuesday. If we've got earnings on Wednesday after the bell on November 1st, don't forget we've got Fed Powell talking on the 1st. We've got a ton of earnings next week and the week after. Let's just get into what's going on. There's a whole bunch of, this one's a confluence of bull, bear case, and growth and value investors coming together. PayPal is oversold. The technicals are terrible. The new CEO came on board in September from Intuit. There's just a whole bunch of stuff going on we're going to talk about tonight. I'm just going to try to go fast. I'm going to try to tell you a little bit about what I do, how I go through my thought process. There's other videos that I have if you're interested. This is an options only channel. So enough about all that. Let's get into PayPal. We've got the stock selling off. It's below the pre-pandemic. We've got a new CEO, Alex Chris from Intuit. Looks like he, from what I just read briefly, he's got a lot of financial experience over there. And question is still, the jury's still out whether or not he can really get his arms around the monetization and the software side of the business. We've got price targets we're going to go over. We got next week, like I said, the November, the Fed. It looks like they are 99% chance of keeping rates unchanged. Previously, that was not the case, but they think they're going to raise one more time this year. Let's see. We've got the 10-year. We've got the 10-year yield. Really kind of crazy here. Really quick. Let's just take a look. It's pushing that 5% number, and on the 1-minute chart, you can see it touched 5 and then sold off. This is like key, guys. Like this is the thing that's putting, the panic button. And some people think it's over. Some people think it's going higher. Somebody's going to be wrong. And if it goes higher, the market goes lower. That's just basically what's going to happen. The S&P is at this mother of all trend lines. As people are pointing out, it's below the 200-day moving average. If we can't hold this 4,200 level, or a little bit lower, as Art Cashin likes to call it, 419 maybe, it's lights out for this year. If we can hold, but believe me, the market will try to hold this level. It's not stupid. It's not down here by accident. But, and it's a big but, if the market's going to hold, it's going to be saved by the likes of these names: Meta, Amazon, IBM, Visa, MasterCard, ServiceNow, Capital One. We had some of the banks are out of the way now. We had Netflix, which came in great, right? But then with respect to PayPal, it's getting lumped into the financials. And if you saw, like, a guy that I follow, you guys probably follow him, and he's a good guy, the YouTuber, Jeremy Lefebvre. I can't remember how to pronounce his last name. He does a good channel, and he talks about PayPal. He likes it. He mentioned, and I actually took a look at it, that American Express just reported, and they got crushed, but they had good earnings. So, and now they're below the 200-day. I'm a big holder of Visa, and I'm watching this 200-day. So if you're starting to see a lot of stocks that had this nice kind of recovery since October 22, we're in this recovery. But if we start to see them breaking down out of these channels, it's kind of starting to show cracks in what's going on. Like even Netflix came back, kind of came down, but then recovered. The question is it enough? Like, is it going to be back above these trend lines? And I'm not sure. I think the market is trying to tell us something. And like Visa's probably a great example of this. I don't know what MasterCard looks like because I don't follow it, but similar pattern. If these guys can't stay above these trend lines, the market's telling us that the market wants to roll over. And going back to spiders, we're gonna. A lot of people think we're going higher, because we're going to come in and get rescued, and Thanksgiving's going to be great, and Christmas and all that crap. But the consumer is tapped out. We have all-time credit card highs. We've got like, the problem is like the Tom Lees of the world are telling everybody that the market's going to go higher, and we've got, he's right from a macro perspective, but this is fine tuning in here. Like this says that the consumer is strapped. We have massive credit card debt, all-time highs. The pandemic money's running out. The jobs, while they're strong, is a lagging indicator, and a 10%, not even a 10%, a 5% cut or 2% cut in the workforce or slowing is going to slow the next quarterly earnings. Revenues are going to come down slightly, or net income per share is going to come down slightly. And that's enough to keep us, below this line between now and the end of the year. And it happened in 2018, I think. But 2018, in between, right here, December 4th to December 26th, we saw a huge drawdown, and then we finally recovered. But it can obviously happen again, just from the fact the outflows and the fact that the consumer is stretched. And as soon as the S&P, it already is below the 200-day. We're not even close on a weekly level. So I look at the weekly death cross, like the weekly 50, the 50 weekly moving average over the 200 weekly. It's not even close to recession worrying and things like that. So yes, we probably will bounce, but if we break this trend line on the 50 weekly or the 200-day moving average, you've got algos that are just going to basically sink it. So we're looking at now levels below 400, down back into the 380, 390s probably. Remember the 391 range was a huge fight all year round, and then even lower. So between 390 and 380 is where we're going for the rest of the year if we're not careful. So what does that mean? Why am I saying all this? But PayPal, everybody wants to know, if you're in PayPal, you're wondering, like, do I buy more? Because I was looking at it at 67, and I actually think I bought some in one of my accounts. But people are saying, like, and this was a double bottom in here that broke, but people are saying, if they own it, should I buy more? It's mispriced, right? That's the $64,000 question. Is PayPal mispriced? And if it is, we can take advantage of that with options, because that's what this show's about. And so this 68, if you look at the just purely technicals, it double bottomed earlier January, and then in the June quarter, or the May quarter, it sold off. Even though they had good numbers, they beat their expectations, they reaffirmed guidance. They've got decent. If you look at the EPS, they came in at $1.16. They're looking at $1.23. They've got increased guidance for EPS. They've got increased revenues. The problem is that the growth rate for this 3-year average growth rate for PayPal is in jeopardy. So they've got a problem with growth. They've got a problem with monetization. They bought, Braintree, and they own Venmo. They're not monetizing. They need to figure out a way to monetize. They have a new CEO. The new CEO could potentially kitchen sink the quarter. And so pro tip, like, if there was a new CFO, that's a bullish trade. Like, 2 CFOs are better than 1. Always buy the stock. If a new CEO comes in, that's an uncertainty. If anything, that's a negative, because the CEO is going to have to get his or her arms around the company, and they're probably going to kitchen sink it. I mean, either way, they kitchen sink it, right? as an excuse, but as you know, Karen Feinerman would say on CNBC. Um, and then another thing, just price is truth, right? So the price is terrible. It's got this big question mark that I like to draw. This is more of a day trading pattern, but this question mark here is huge negative for the stock. And that's not necessarily meaning it's a negative, other than it tells you exactly when you should buy the stock. You should buy the stock when it breaks this trend. That's when you should buy the stock. So yeah, that's it. So if you own it, you're going to have to buy it probably at lower prices. If you're looking at it, if you're watching it to buy it, then you can buy it at cheaper prices. We're going to talk about expected moves and things like that. If they blow it out of the quarter, if they have a blowout quarter, then you know you're going to get a chance to buy it in somewhere in here, $10 higher. So what? It has to stay above that 67 level for it to be a buy anyway. So basically, don't chase it. And we're going to talk about some option trades in here. Typically, I like to trade delta neutral. And so that means that we don't care about price. But in this case, I looked at all the numbers ahead of time. I'm not feeling that great about the stock. Like, so the daily here, implied volatility is getting better, but there's not a lot of volatility going on. And so I have a couple of trades here. I'm going to get rid of these. It was just like before I did the video. So let's just look at expected moves. Now I have videos on expected moves, buying power reduction, position sizing, all that stuff. This is an option show. If you want to learn more about options, and hopefully you do, if you're a beginner option trade, you'll love my channel. If you're a expert option trader, and I've been trading over 10 years in options, you'll get something out of this video. My videos are meant to be more of hands-on. I'm not going to just tell you stuff. I'm going to show you exactly how I trade. So how do we look at expected moves, and why do we care about expected moves, right? So for earnings events, it's just one particular type of option strategy that we use. And going into an event, so November 1st would be option after the bell would be the earnings announcement. November 3rd is the Friday with the first weekly option expiration after earnings. And so the way we figure out expected move, one simple way in the platform, if you can use any platform for this, is just look at the straddle price of the current price on the straddle at roughly $53 in this case. And it's like a little over $5. So it's about $5.50, or let's call it $6. So your expected move, or one standard deviation move, would be about $6. Now, the implied volatility right now is 73% implied volatility with this plus or minus $6 right here. It shows you in the platform on Thinkorswim. You can use Tastyworks, Thinkorswim, Fidelity, any platform to do this. And now there's other ways, obviously, to calculate this, but let's just assume it's a $5 one expected move. Another way is within the risk profile. You can set your date to the expiration, and this will show you that one standard deviation move if you have it set up here. So there's other ways to look at it, right? The platforms usually calculate that for you. So let's just assume that PayPal can be plus or minus $5, $6 for earnings. That's going to put us at this magical gap over here. If you look, there's a gap over here at 44. So if you look at if the stock sells down to 50 next week on some bad news, 44 comes into play. If the stock moves up, then 50 will be back in play, this number here, but also it could go as high as a 2 times expected move, meaning they blew the numbers out. You could be getting you back above that 66.7 number. So we got November 1st. We want to look at a trade, right? There's not a lot of volatility in the name right now. A $6 move isn't a lot for the likes of a PayPal. There's other areas out there. So that's kind of a spoiler alert. In this case, and this is a preview, we'll come back next week. But in this case, I'm just thinking people are all playing it to the upside. They think they're going to crush the number, but what if they kitchen sink the quarter? So guys, I'm thinking like I want to play a directional trade and have zero risks to the upside. And the other reason is if they bring in an activist or if they say they're going to sell Braintree or they're going to monetize Venmo, you got plenty of time to buy the stock in here, right? Or you could actually just target like, you know what, I can buy some stock and then sell covered calls against it. That's another option that we'll talk about next week. That's more of like I guess a low risk type of trading strategy if you own the stock. So that's not such a bad stock replacement strategy isn't a bad way to go. But my point is that PayPal is getting interesting. It's not going away. It's a brand. They're getting lumped into the financials. They've got good earnings expectation. They've got some growth issues. But if you look at it, they also got some positives for they've got some positives going in. The revenues are increasing. The net income is in line with 2019. So they've got to solve the net income. They've got to solve the margins. They're basically like entering what would be called like a value trap or value type of stock right now. But if they can pull it out, it's mispriced, right? So the question is whether or not you believe they can come up with something to return this stock to like massive profitability. And they have a lot of liabilities on their balance sheet. They need to get, even though they're buying stock, their debt to income ratio is getting higher, and it needs to come down. So they're increasing debt, they're increasing their liabilities. We can go into a whole show on financials. We're not going to do that, but because we're looking at the stock right now. But I'm trying to just make the case for this is not going to be a short-term fix, guys. They are probably going to, even like, hey, look at American Express came out great and they got crushed. So I think there's one more quarter of downside, zero risk to the upside. Let's take a look at some trades. So one way to do that is just like, let's say you want to get some premium out of this because $6 move isn't a lot and there's no implied volatility here. So if you want to look at a single selling a put, let's say, to get some VIG, get some decent profit here, you can go down to the 45 put in December. That might be an option for people. That's a 17 delta. This is about a $450 margin requirement for one contract. You can see other videos that I've done that it's basically the price minus the strike price minus the price, and 20% of that is what a brokerage firm is going to want you to put up. So 20% of 45 minus the 53 or whatever that is. It's going to be $450 roughly. You can sell maybe 3 or 4 of those contracts. So $400 gain here would be a $1,600 outlay. Again, the outlay, $1,600 should be between 1% and 3% of your portfolio. Another thing you can do is just make this into a strangle. So you can go out to the 16 delta and you can just make it do 4 of these, right? Depending on what platform you're in, you can do a strangle here. This is a $724 profit on a $1,600 outlay. That's one option you can do. Now, be careful of the call side. There's call risk in here because you've got acquisition risk. You've got activist risk. So be careful on that side. Another thing you can do here is what I like to do is just directionally, right? One of my favorite trades that works out if you craft it up right and you get a good timing and you get a good price would be a diagonal. In this case, we're targeting the November 3rd, that Friday, and then the following Friday, the 10th, right? So this would be a diagonal trade looking at that to get down to that 55 level, let's say, or even 56 level. And we'll turn that into a put diagonal in the platform. Actually, sorry, I didn't want to do that. I want to target like the 50 area, sorry, or the 51 area with a put diagonal. So this would be selling you sell the 3rd of November 49 put, and then you buy the 50 in the next week. So that gives you the protection and that gives you that skew, if you will, or that gives you that downside potential. So this is a 47-cent option contract, right? Kind of a diagonal vertical, if you will. And you've got potential to, to take this off. Let's say, now I usually don't let earnings trades diagonals go that long. I will take this off on the 4th or the 5th. I wouldn't wait until the following. I would take this off on the 3rd, sorry, the 2nd or 3rd. I wouldn't let this trade into next week, into the following week. So just quickly looking at this, you can do maybe 10 of these contracts. So that gets you, $464, risk can get you maybe half of this back. You're going to get a $700 gain out of this. And if they get crushed, there's no risk to the downside. And then you can always consider buying the stock when it's lower. Another thing you can do is you can put these together. So you can take 10 of these and then combine that with your selling in December, and that's your profit curve. And this is almost like a jade lizard, but it's a jade lizard with it's a weird jade lizard. It's a diagonal with selling a strangle, or you can just make you can do it this way too. You can just say, I want the single December. I want to go down to the 45 or even the 40, let's say. Let's say 45. And you can do 4 of those. So that's almost like a jade lizard. Now, here's the deal. Like when we do option trades, if this sells off to 50, Monday, Tuesday on a down day, you could almost put a limit order on the 40 to get the dollar trade out of this. So you get $1 out of the 40. Now that starts to become really lucrative. And let's say you didn't get your diagonal on yet. You can just wait till it bounces, wait till the Tuesday night, and then you can put this diagonal on. So there's a couple things you can do, but this is a preview. This is meant to just show you what I'm thinking about. Again, I hate to burst people's bubbles. They're bullish on PayPal. I'm bullish on PayPal, but it's not, I don't think it's ready. I don't think it's ready to drink yet, as like a wine analogy. This stock we need to see this thing sell off, basically. We need to see this thing sell off to 45 before it comes back. And so that's my strategy, and that's what you should always do when you're trading options, is have a strategy. I love this trade right here. I would play this all day long. There's very limited risk to the upside, like $74 to the upside, and there's reward to the downside. And then there's other trades coming up next week. We've got Visa, MasterCard for the financials. You've got Meta coming up. Maybe I'll do a video. Drop me a line. Drop me a note in the channel, or follow me on the Discord. Join the Discord. It's free. Options Unleashed on YouTube, Options Unleashed on Twitter. We talk about actionable headlines, earnings calls, the daily grind. I've got generational tips and tricks. I've got bearish plays. I've got bullish plays. How you're trading options. Option videos are all out here. You can go watch all my videos. I'm going to post this video. Good luck, and we will see you next week. I'll do some earnings plays, and then I'll follow up on PayPal during the week. You have to wait until the price is right to grab PayPal. I don't think it's ready. So you're going to get an opportunity. So take care, stay tuned, and I'll see you on the calls.